Ladies and gentlemen, good day, and welcome to Sandhar Technologies Limited Q3 FY23 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Jain from Dolat Capital. Thank you, and over to you, Mr. Jain.
Thanks, Nirav. Good morning, everyone. On behalf of Dolat Capital, we welcome you all in the third quarter FY23 conference call of Sandhar Technologies. From the management side, we have with us Mr. Jain Davar, Co-Chairman and Managing Director, and Mr. Yashpal Jain, CFO of the company. We thank the management for providing us the opportunity to host the call. Now I hand over the call to the management for their opening remarks, followed by the question and answer session. Over to you, Jain, sir.
Sir, we cannot hear you. Sir, may I request you to unmute your line from your side, please?
Pardon? Hello?
Yes, sir.
I think it's not audible.
Hello, can you hear me now?
Yes, sir. That's better.
Okay. Can you hear me?
Yes, sir.
Yes,
Now
sir.
we can hear you.
Okay, super. Okay, well, good morning, everyone. Thank you, Abhishek, for putting this together. Thank you to you and to all at Dolat Capital. Good morning to all the investors and well-wishers who are here with us this morning. I will begin the conversation by, first of all, sharing some of the good stuff that's happening. So for one, I think something that's been on the parade for a long time are our new investments. And I'm very happy to share that these investments, whether in joint ventures or in subsidiaries, have started to build revenue. In fact, to the point of JVs, all of them are EBITDA positive except for two, where there is a little bit of a foreign exchange fluctuation that is showing the negative. But going forward, I think this is a trigger from when we should all be in good hands of profitability. Also, in terms of subsidiaries, I think a large part of that investment has already been done and concluded, and revenues have begun. We hope to get the full aspect of these revenues in this coming year. Where the market is concerned, yes, the two-wheeler market still stays a little subdued because of model changes and so on and so forth. But I think the other elements of the market, whether it be passenger vehicles, whether it be commercial vehicles, whether it be construction equipment, are all now rearing and roaring. So we should be able to get benefit. The last thing I want to say on the numbers, of course, is that the quarter that has gone by has been a little slow for the entire industry, and therefore you will see that most of the industry, or in fact all of the industry, has gone down in revenues. But it's been a stabilizing factor, and the good news for us is that we, on a standalone basis, are back to our double-digit performance in terms of margins. So that is something I thought I would begin with. I also want to mention here that there are some new customers with who we have tied up for new orders going forward. That work is now taking off, especially in the area of smart locks that we've been talking about for a while. We've also got some new Japanese customers who are extending and have assured us, or in fact given purchase orders for large sets of orders going forward. So I'm going to leave it there, and then I'm very happy to take your questions, where questions are regarding numbers and so on and so forth. I have with me my learned colleague in Mr. Yashpal Jain, who will be able to answer all of your queries to your satisfaction. And in case there is anything that I can supplement with, I'd be very happy to do it. Okay? Thank you.
So shall we open the floor for questions?
Yes, go ahead.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Udit Gupta, individual investor. Please go ahead.
Good morning, sir. Sir, my question is that we are looking at so many plants and factories, and sir, the average revenue comes to about 60 crores per factory. So what is the logic behind this, sir, if I could know that?
Can I know your name, sir?
Sir, Udit Gupta.
Udit. Okay. Udit, thank you for that question. That is how it probably shows up if you do a simple math. However, our aim and target is that every plant that we set up needs to have a minimum revenue of 100 crores. There are now units that are at almost reaching 300 crore level. Of course, what you see is work in progress. So while each unit is being built to that minimum capacity, you would realize and understand that every time it's a new product line or a new engineering product, it takes time for it to reach that particular level of an output. So anything that you see under 100 crores is a unit that is wanting to be at 100 crores ASAP. So that's the logic of most of these plants. The reason why we put up these plants and why many of them is because of customer orientation. Customers want us to be right next to them. That is how this business runs. For JIT supplies, which is just-in-time supplies, as you may be aware. The other aspect of this is that we keep the numbers of people in each plant to a level where it is manageable. So you would see that in the last 35 years, we've never had 1 day of struggle or 1 day of a breakdown in our supplies to our customers. Keeping all of that in mind, we make these as modular units with the initial plan for each business to be or each plant to be for at least 100 crores. I hope that answers your question.
I get your point, sir. Sir, but do we have duplicacy of the products in the plants, like the same product being made in multiple plants?
Yes. In many cases, we do have to have that. And the reason for that is you would appreciate and understand that in many cases, we started off with that OEM as being a second or a third supplier. They already had one or two. When we came in, we started off as a third supplier. And because the customers were happy, while they wanted to give us more business, they obviously wanted to mitigate any risk that may arrive out of one plant. So we assured them that there would be more than one plant that would be a feeder line for them. And therefore, you will see whether it's a Hero or whether it's a TVS or whether it's the other, we do have parallel capacities running at different plants to feed them if required. So, for example, if Hero has plants in Gujarat or in Daruheda at one level, they would want us to put up facilities close to their plants, also for JIT, also for risk mitigation.
I get your point, sir. And sir, my second question is that, sir, in the four-wheeler space, sir, are we looking at new customers or, sir, are we making any inroads there?
Oh, yes, absolutely. That's an area which is wide open for us. The good thing was that we were supplying to Honda, which was a premium product. And based on that and with our now very deep relationship with Honda Law, where we have an engineering center here as well now, we are very, very close to cracking some major expansion deals with some of the OEMs. I'm sorry I'm not at liberty to give you names of those, but we should be hearing some good news soon.
And so the new products in the four-wheeler lines are like those...
We supply to Mahindra in the meantime in any case.
Yes, sir. So the new products are like the cameras and the sensors. So are they making good progress, sir?
Yes, all of them. So I started off this morning by saying that all the joint ventures are now at turnaround scenarios. We lost out 2 years on account of COVID, where some of the product launches were delayed, and the OEMs were keen that they continue their current sources of supply, which were largely imports. All that is changing now, and our business there has started to show not just sparks, but now good growth.
Thank you so much, sir.
Yeah. Okay.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Shaili Jain from Dolat Capital. Please go ahead.
Hi, sir. Sir, in two-wheeler space, the volume and premium segment is picking up well, while the entry-level segment is still timid.
A little louder, please. A little louder.
Yeah.
Better, sir?
Who did you say this was?
Sorry?
Can I have your name, ma'am?
Sir, Shaili Jain.
Shelly.
Yes, sir.
Yes, Shelly. Please go on.
Yeah, sir. I was asking that in two-wheeler space, the volume and premium segment is picking up well, while the entry segment is still timid. So what's your outlook for two-wheeler for next quarter and FY24? Can you please throw some light on that?
Well, Shelly, the good news is that there is a lot of talk in the industry on the new launches in the entry segment basis, especially from Honda. Honda, as you may be aware, is now cracking where Hero was the master at some stage. They built up a huge capacity in Bangalore, and the entire market is abuzz with the entry-level segment. You are aware that, from in the last 4 years, prices of motorcycles from an average of, let's say, 50,000 have gone up to 80,000 rupees.
Yeah.
And therefore, the entry level has changed dramatically. Now, with this new launch and the entire market being scared of this new Honda launch, everybody has started working dramatically on entry level launches. So we will see a lot of that, and one is very, very hopeful. You'd be very happy to know that your company here, Sandhar, has broken into that foray of Honda. I remember our investors used to ask us whether Honda was going to be a major player for us. I'm very happy to say that it is, not only for our regular locks for the entry segment and premium segments, but now also for smart locks going forward.
Yes, sir. So also, sir, like in this quarter, the margin was also improved.
Yes.
Which has, due to the sharp jump in gross margin. So, going ahead, will this be sustainable?
Oh, absolutely. I think this is the beginning of what you will see would not be just regular, but perhaps on a growth mode going forward into the next year. But on margins and numbers, let me request Mr. Yashpal Jain to come in and take those questions.
Sure. Yes, please, Shelly. Hello?
Shaili, we are
Yes.
on video line. Yeah, go ahead.
Yeah, sure. So, what is our margin outlook for next quarter and FY24 going ahead?
For next quarter of the current financial year, you mean to say quarter 4?
Yes, sir.
We are very hopeful of retaining our quarter margins of, near about to quarter 3 itself. As the new projects are picking up, price settlement largely has been done with the customer. So we hope to maintain the same margins.
Yes, sir.
Shaili, do you have any follow-up question?
No, sir. Thank you. That answers my question.
Thank you. Ladies and gentlemen, you may press star and one to ask the question. The next question is from the line of Shailesh Raja from B&K Securities. Please go ahead.
Thanks for the opportunity, sir. Can you please give us the total startup cost provided in last 9 months and expected number for the full year? And in FY24, how much it is expected, sir?
You mean to say about CAPEX?
Startup cost.
Startup
in the P&L.
Yes, charged off, right?
Yes.
So like in total level, you asked me at a console level, 21 crores we have charged as a startup cost.
In 9 months?
Yeah.
How much it is expected in 4Q, sir? And also full year in FY24?
So another, in quarter 4, we are expecting something around 4 to 5 crores in between. So the annual may be around 25 to 26 crores in between.
Okay. Next year, sir?
Next year, largely the projects will be operational. So I foresee in a total year basis on the current projects, again, we expect something around 4-5 crores in between, not beyond that.
Okay. Good, sir.
Yeah.
Sir, other than maintenance,
just to add this, we are trying to make all the plants operational in the current financial year itself, so that from the next year, they start running at their full capacity. That's all.
Okay, good, sir. Sir, other than maintenance capex of 50 crores, is there any incremental capital will be deployed in the business?
Well, as a policy, we keep our capex limited to the annual depreciation. We are expecting annual depreciation charge of around 130-35 crores, depending on what the actual figure comes up in FY23-24. But as of now, we are working very prudently and conservative in terms of capex. So as of now, just we will be requiring capex to finish up our spillover capex of the earlier projects that are in the pipeline. Beyond that, we are not having any plans as of now, except to keep running our lines. That's all.
Okay. Sir, with TVS debtor days reducing from 45 to 15 days, is there any discount we are offering for getting payment in 2 weeks? Can you please throw some color on this?
In terms of the shortening of the receivables period, you mean to say? DSO?
Yeah, correct. Yes, sir.
So in new projects, we have renegotiated the terms with the customer. That is the reason. So the payment terms has been reduced from 45 days to some 15 and 7 days in some of the projects. That is the reason. No discount is offered to any of the customer. Only we have renegotiated the terms so that it's helpful for us to boost our profitability for the new projects. That's the renegotiation we have done with the customer without compromising on the quality. On the rate.
Okay, good, sir. Sir, my last question. Currently, the two-wheeler mix is 58 and four-wheelers is 22, and CV and others is 20% of total revenue. So how the mix will change over next 2 years? Because next 2 years.
Well, predominantly we'll be continuing to focus on the two-wheelers because we have done a lot of investments in two-wheelers. But as Mr. Davar has told in the previous question, that we are, keeping an eye on the four-wheelers also and trying to expand in the four-wheelers. But what I presume is that at least 45 to 50% will continue to have a revenue share of two-wheelers, and remaining we can see from the commercial vehicles and the four-wheelers. With this, I would like to add that in 2 years of time, we are expecting a good jump in the revenues also. So, accordingly, you can estimate that four-wheelers and commercial revenues will be boosting up.
Okay. So, with the existing gross block, how much we can do, sir, revenue?
We have a capacity because it depends on the number of shifts we are running, the number of orders. So, we are not running out of the capacity at the same time. We are not idle. So, even if another 400-500 crores of revenue is required to get it, we can easily add in the
so expanded capacity, we can add another 400-500 crores?
Yeah. Easily we can add without going for any major capex. And assembly lines, they don't require much capex also. That's all. It's a very small investment. Even if we have to expand or some specific requirements come from the customer side or a new order comes up, that's all.
Okay. So last 7 years, our average gross margin was 41%, so that have come down to 39%. So with the expected increase in four-wheeler mix, so can we expect some 200-300 bips improvement in gross margin in FY24?
Yes, we are rigorously working on going back to our earlier figures. If you see last 3 years, we have witnessed very dramatic changes, very ups and downs in terms of commodity pricing, also market, sluggish environment in the auto industry. So we are overcoming all those drawbacks and those hurdles. And we are expecting that in the coming year of time, we go back to our earlier profitability figures.
So what will be our depreciation number, sir, for next year? In FY24 with the expanded capacity?
I won't be able to give you exact figure, but on an estimated basis, it will be rendering something around 135 to 140 crores at a console level.
Okay. Okay, sir. That was helpful. Thanks.
Thank you very much.
Thank you. Participants, you may press star and one to ask the question. Next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Good morning, sir, and congratulate for the strong set of number in a tough time. Sir, you are targeting double-digit margin in FY24. So what would be the levers for the margin expansion from here on? From here on, what would be the levers for the margin expansion in FY24?
Like if you ask me, as I told in the earlier question, that we are working in improving the margins at the cost side also. At the same time, we have done some negotiations with the customers also in terms of price hikes also. So it will be both ways, internal as well as the external from the customer support. That's all. And also the product mix is also quickly changing. The revenues are boosting up, so the fixed cost always remains fixed, even if the revenue goes up. So all these factors will contribute to the increasing the margins of the company.
So what sort of the growth you are looking from the locking and vision system in FY24, and how much increase in content per vehicle?
Well, presently we have a good content per vehicle in terms of two-wheelers, with the higher content ranging up to 12,000 rupees to some of the customers. And we see a good growth in the locking and I would say the proprietary business, normally we call it. So we'll continue the double-digit growth in the locking and mirrors in the coming year also. With, as Mr. Davar has just told, that we are moving into the smart locks and working closely with Honda as well as Suzuki. So in the coming year of time, you can see a good boost in the two-wheeler business also, especially in locking and mirrors.
Okay. And in the cabin and fabrication business, we have seen a impressive growth in last couple of years. So can you throw some more light on what new orders win is there, and what is the current capacity utilization, and what kind of the margin you are making in that business?
So well, like cabins and fabrication as a commercial market is, as a construction industry is again boosting, the government pushing a lot of expenditure on infra. The business is also gearing up. We continue to maintain the same momentum in the current year of time, and we are above 8% of EBITDA margin in cabins and fabrication, and we expect to continue beyond that.
And do you have any capex plan for the cabin and fabrication?
No major capex as of now for the present capacities. Yes, if some new good business comes up, then the call can be taken at that time. But as of now, we don't have any major capex except a marginal small routine capex. But if some new project comes up, some new customer comes up with our idle size that we expect a revenue around 100 crores or 85 or 100 odd crores plus to set up a new unit, that time that can be worked out. But as of now, nothing in pipeline.
There's a lot of the traction is coming in the aluminum die casting business. So what is your performance is also very good in this business, especially on the domestic side. So what is your current capacity utilizations, and what kind of the growth you are looking from domestic and overseas business in the aluminum die casting?
Sir, you would like to answer this?
Come again, please.
The question was regarding growth in die casting business, aluminum die casting in India and overseas.
Yes. Do you want an expansion on that? Okay. Thank you for that question. You are aware that this business was basically initiated when we acquired this company out of Spain. And post that, we have done some greenfield projects in Mexico. We put a finishing center in Poland, and now our new facility in Romania is up. So when we bought over the business, at that point of time, the revenue was much smaller. But with all of this, we've not just doubled it, but the margin growth has been dramatic. So when we bought over the business, the margins were at the level of 3.5%. Now we are very comfortably into double digits. So with us having established that business overseas, we then grew that business in India. That business in India, from what I understand now, is close to about 400-500 crores, and it's on a major expansion route from there. you are aware that we have been given the entire business of TVS for their machining. Now that will increase the margins dramatically because margins in the machining business themselves are much, much higher. So we are very, very bullish on this business going forward to do the kind of precision castings that we do, and now the machining business to take over, which not only has potential for our existing customers in India, but also has a huge export potential. Going forward, I think it will be one of the main pillars of our business divisions for Sandhar.
So in this quarter, overseas operations was impacted, especially on the margin side. EBITDA margin was dented, and that has come down. What is the reason?
Margin has come down. Margin has come down where?
In the overseas operation.
Sir, I'll answer.
In overseas operations, yeah, that Yashpalji will answer.
So Abhishek, the reason if you see is the footnote in the investor presentation, we have put up a one-time commissioning and charging cost of Romania plant amounting to rupees 7.65 crore in 9 months. Okay. So we have to normalize these expenses. I mean, we have to normalize this startup cost. And if you eliminate this, results remains to be, wonderful in overseas Barcelona console operations. So the only reason which is drawing down the margins in the quarter is just because we have put up this one-time cost because Romania was commissioned in December last week. That's the reason.
So will it continue for the next quarter? And
No. It's already commissioned now. So large expenses already been booked. Hardly around 1 crore rupees might come in this current quarter. Otherwise, everything is booked up in Romania. They have started invoicing also from 25th of December last year.
And when will you start to receive incentives from the government for setting up the plant?
Yeah, so one installment we already got close to around 5 crore rupees. Second installment is in pipeline or 23 crores. In converted rupee terms, we are expecting something around March or in between April.
So that will be shown in the other income side?
No, it's a capital investment, so will be netted off from the capital investment.
You won't show it in the profit and loss account?
No, because actually all these grants, they are governed by the IFRS requirement. So based on the IFRS, the treatment will be given because we are against the capital expenditure. So we need to go through the capital expenditure route.
Thanks, sir. That's all from my side.
Yeah.
Thank you. Participants, you may press star and 1 to ask the question. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Yes.
Yeah, sir, what would be our current debt levels?
Currently, at the end of December, we had a gross debt of 573.53 crores. Right? And in terms of net debt, it was 553. Just not much of a gap.
Okay. And I just wanted to understand why our interest cost is only, 9 to 10 crores a quarter?
Annually, we are expecting 36 crores of interest. Because in terms of working capital, we are not having much utilization of working capital. That's the one reason. And our average borrowing itself, if you see the chart, it's not, if I take a entire product of term loans and working capital, it's something around 5.5%, not beyond that.
Okay.
And we have...
Yashpal, you want to give a breakup of our costs in India and overseas?
Yeah.
In terms of debt levels and so? Sorry.
Yeah. I'm coming to that point, sir, also. So what I think, like, if I give a breakdown of the debt, it is of 573 crores, 260 crores is in India, 313 crores in overseas, while the cost of overseas debt is ranging from 1.65% to 3.5%.
Okay.
That's all. So that's the reason the interest charge is lesser. If you straight away multiply by 7% or 6%, that won't be working. That's the reason.
Okay, I understood. And couple of clarification I wanted. In the previous call as well, we were looking at 2,800 to 2,900 crores revenue this year and about 30% growth next year. So is that the same? Is there any change in that?
No, if you see a 9 months figure, we have closed at 2,150 of total income.
Correct.
And quarterly, we are around above 700 crores of market. In quarter 3, we closed at 725 crores. And quarter 2 was 749 crores. and quarter 1 was 677 crores, right? So even if we take a moderate average of all these three, 700 crores we can easily add up in quarter 4. So that will be something around 2850 and plus in the current year. And with the new projects started maturing and giving us the revenue, so next year, yes, we are very much on the same growth that we have, given an expectation in the earlier calls of 30% now.
Okay, understood. Fair enough. So next year also 30% growth is what we are looking at, right?
Yeah, we are looking up because new projects will also start giving us revenue.
Correct.
So that's a fair enough estimate that we are sure of achieving it.
Correct. And you mentioned about 200 to 300 basis point improvement in gross margin, right?
Right.
So that's what we are targeting FY24?
Well, improvement of margins is a continuous process. So I may not be able to give you any assurance, but yes, we are targeting to improve our margins in terms of cutting down the cost also and in terms of our pricing with the customer. And we are looking forward to another increasing by at least 100 point basis in the coming financial year. 100 to 150 point basis.
So 100 to 150, so currently 9%, maybe what 10 to 10.5%, what we might be.
We are targeting double-digit margins in the coming financial year. That's what.
Double-digit margin. And this 200 to 300 basis point, whatever improvement, maybe it might come in 2 to 3 years, right? Driven by both the.
It will take a time.
It will take time. Okay, understood. Yeah, that's it from my side. Thank you very much. All the best.
Thank you very much. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Next question is from the line of Udit Gupta, individual investor. Please go ahead.
Sir, my question is that, sir, you gave a debt picture for FY23. So how are we looking at the debt position in FY24, sir?
Sure. So like I've given a debt of, it's 573.53 as of December, right?
Yes.
And we are targeting that we won't be exceeding 700 crores by close of March 23. This is our target. And for the coming financial year, we have kept a target from internal accruals. We target to repay around 150 crores by free cash flow generation. So if you really ask me with the current CapEx, current cost of the project, to fund those projects and complete those projects, March 24, if something new, no new project comes up, we are targeting to be around 550 crores of debt, not beyond that.
And sir, on the export side, sir, by FY24, what percentage of revenue are we expecting from the overseas business, sir?
Well, overseas business is generating revenue overseas. We are not much into exports because cost-wise and it's not viable.
So sorry, sir. My question was about overseas only, not exports.
Yeah. Okay, sure. So overseas, we are expecting something. The revenue might grow by another 25% with the Romania plant coming up. So we are expecting 300 crores we have done till quarter 3. Another 100 we are expecting 80 to 100 in quarter 4. So you can expect fairly something around 480 to 500 crores is the expected figure in the next financial year for overseas.
Thank you, sir. Thank you, sir.
Thank you. Next question is from the line of Abhishek from Sharekhan Limited. Please go ahead.
Thank you, sir, for the opportunity. Just a few questions that, sir, we have added a few new clients in our portfolio. But despite that, that has not been reflected in our sheet metals revenue. Anything we are expecting in coming quarter, or is there any other reason which is this limited performance in the sheet metal business in this quarter?
Sheet metal business, like Abhishek, if you remember in the last call, so you told that we have set up new projects, and it takes some time for them to gear up with the revenues and the margins. So now, out of our 4 sheet metal projects, 2 are in the full phase of commercialization. 2 will be by April 23. That's all. And we are again expecting to be above 8%, 8.5% of margins in sheet metal business in the coming financial year.
Any reason with this high margin expectation?
We are having good volume indications from the customer side. So what happens after a certain volumes, the fixed cost remains to be neutral.
Okay.
And that
Okay.
adds up and boosts up to our percent margins in terms of the revenue. That's all.
Okay. But it is fair to assume that there is no price hike from the client side.
Pardon? Can you come back?
Is it fair to assume that there is no price hike kind of a thing in as we are expecting the new margins? No? That is because of the operational efficiency only.
Price hike, but yes, we have negotiated the price at the current level. Last month only we concluded the price fixation with the customer. That's all.
Okay. Okay. So any incremental orders are expected from HMSI?
Well, we are working closely with HMSI for all our verticals like ADC, locks and mirrors. And we are in talks with them for some smart products. And we are expecting to materialize it very soon.
Okay. Okay. And if you can give, sir, outlook your assembly business?
Assembly business is doing fairly well. I would say it's largely dependent on the customer side, the customer volumes, as like other businesses are. But it's going stable. So we are not expecting much of an investment or much of a change in the assembly business.
Okay. Okay. And sir, one last question on the, if you can share your outlook on the two-wheeler sector, especially what you are hearing from the clients like Hero and TVS, because in general, whatever we are hearing that the two-wheeler sector is the one sector which is still lagging across the other, comparing the other segments of the automobile sector.
Sure, Mr. Dawar would be right to answer this. Sir, will you answer this question?
Yeah, sure. Yes, you're absolutely right. We are still not at levels of what we were in 2018, 2019. As I mentioned in the beginning, the price of two-wheelers has gone up by an average of almost 60-65%. It has been a huge shock to the entire ecosystem.
Okay.
However, from what we understand now and from the green shoots that we hear in showrooms of footfall, especially with good monsoon that has happened second year in a row, there is stabilization in the understanding. These price hikes came on account of several factors. One were mandatory that the government regulations brought in. Secondly were levels of comfort that had been brought into the system. And third was the electronification and the entertainment aspects that were added on to various vehicles. I think those things have kind of stabilized now. And like I said, the market is extremely bullish on this going forward. Each one of the OEMs for two-wheelers have lined up launches. But I think the biggest thing would be the introduction of new models in the entry segment. So whether it is a Honda or whether it is a whether it is a Yamaha or whether it is a TVS, all of them are working very, very diligently on their new entry point barriers. And that, I think, will lead to the volumes that are necessary. Right now, like I said, probably the cheapest motorcycles are 80 to 90,000 rupees, which is much over the affordability level. But these new entry points will be a game changer, and you will see that in this coming year.
Okay. Okay. Just one extension to this thing that you said that bullish on the, your customers are sounding bullish. Is it right, or means it is your thought process that things are bullish?
No. It is. We are only going by the messages that we get from our customers.
Okay. Thank you, sir. Thank you. These are all from my side. Thank you.
Thank you very much. Ladies and gentlemen, you may press star and one to ask the question. The next question is from the line of Kumar Gaurav from Dolat Capital. Please go ahead.
Hello.
Go ahead, sir. You're audible.
Yes, please.
Yeah. So hi, sir. So as we expect to grow 23%, 22-23% in 23, so what is our revenue guidance by 24? How do you see FY24 panning out for us, sir?
So as I mentioned in the earlier question, like 2150 we close in quarter 3. And we are above 100 crores of turnover every quarter. So around we can fairly expect 2850 in the current. and next year we are expecting something growth of around 30% in terms of revenue.
And if you can share, sir, major growth drivers for this revenue in FY24, just basically some points, what you see.
Yeah, sure. So basically, we set up 7 new plants. Out of 6 was largely in the forward integration type, I would say the new business type. So they will be all generating revenues in the current financial year. I mean, the current means FY23-24. So that will be boosting out to the revenue expectations.
Okay, sir. And second question is, sir, what kind of ROC we are targeting? I mean, in FY24 or going ahead in 1 or 2 years?
Well, as of now, I may not be able to give you exact figure, but yes, we are targeting a very good ROC that with the beloved investors were expecting us, and we were generating in the year 18-19. So we'll be moving to those figures quickly in a maybe a span of 1 or 2 years of time. But yes, we are targeting a EBITDA margin of double. That I can always tell you.
Okay, sir. And my sir, other question is on JV side. As Jain sir has already mentioned that all JVs except one has already turned EBITDA positive. So could you please throw some more light on JV performance and what is your outlook for JV going ahead?
Okay. So the thing is that all the JVs at operational level, they are EBITDA positive. Bearing 2 JVs because we have some favors to them in foreign currencies and the dollar has shoot up from, you see the levels of 72, 81, 82 rupees. So that is the unrealized loss of forex that we have booked in 2 JVs, JSM and Concall. Going forward, we see a very good business outlook. And even at EBT, we are having 3 JVs positive. And EBITDA, we are having 5 JVs positive, bearing 2 negative due to the forex fluctuation. In the coming year of time, we expect that all JVs in the current, I mean the FY23-24, they will turn around even at the EBT level.
And sir, my question on EV side, in our previous calls, we mentioned that we are developing some products for EVs. So what is progress there, and have you started production or anything from your side?
No, like we have given a bar chart also with the timelines. We are in the stage of development. Some products are developed where they have been sent for validation of the customer also, followed by the validation from the ICAT and other authorities. We are working very fast, quickly on migration to JV on powertrain. And in the coming financial year, I mean FY23-24, we expect to see some good action in JV, including starting manufacturing of some EV products.
Okay, sir. And sir, my last question is on RM inflation. We have seen some correction in RM, but we are hearing that there is some uptick in RM cost from January onwards. So what is your thought on that, sir?
Well, it is a market driven. So if it goes up, we get a settlement in the succeeding quarter from the customer. So quarter to quarter, it affects our profitability. That's all. But it all depends on market dynamics. So if you see the current financial year 22-23, it has not been stable, sometimes up, sometimes down. So that trend is going on. I think that may continue in future also.
Okay, sir. And on EV side, are we adding any new products or any new projects there, sir?
EV,
and also, if you can talk about R&D capabilities in EV, our R&D capabilities in EVs, what are we doing?
We have a dedicated R&D center. Apart from that, we are tying up for new powertrain technologies to manufacture EV specific products. That's what I told. We are working on the same. And in the coming financial year, you will definitely see some action from our side, including starting of manufacturing of some of those.
Let me supplement that, Yashpalji.
Yes, sir.
To that question on EVs. EVs for us is divided into 2 portions. One is our current level of supplies that we do in terms of product lines, which you are aware, whether it's our locks or mirrors or sheet metal or this, that, and the other. They continue unabated, and we supply to several of the new OEMs that are there in the EV industry, as well as the traditional ones and the legacy ones. Then there are new products which have been developed, which are both for EVs and new EVs. These are new product lines for us. For example, a CBS or an electronic steering column lock or a foldable key or a tire pressure monitoring sensor, USB chargers, and so on and so forth, or vehicle location and security systems. There are several of them. But the third element, which is the element which is the specific EV products, which means they have to do with the powertrain, which is the electric mobility product line. Now, in this, you'd be happy to know that your company has already in readiness for motor controllers for 1 kilowatt, 2 kilowatt, and 4 kilowatt, DC-DC converters, which are absolutely ready, the EV chargers, which we expect to be ready in this quarter. The hub motor is already done. The mid-drive motor we put on hold for the moment. So this is where we are. We expect, like Yashpalji has said, production of these new kind of EV powertrain product lines to be in the framework and in the market in this coming financial year. I hope that answers your question.
Yeah, thank you, sir. Thank you. That's from my side.
Thank you very much. Next question is from the line of Radha from BNK Securities. Please go ahead.
Hi, sir. Good morning. Thank you for the opportunity. Sir, given that we have a diverse product range, so in this market, who would we consider as our top critical peers?
That's a very generic question. I don't know unless you can be a little more specific. If you're looking at competition and peers, you're absolutely right. We are in diverse markets and a diverse product line. And depending on the product line that you would want to pick, we would have different competitors. You know, locks, for example, you're aware your company is the largest lock producer in the world. You look at mirrors, we are the largest. You look at seatbelt spools, we are the largest. If you look at cabins, we are the most diverse company supplying to everyone. So depending now in terms of who is our competition in aluminium, I guess in aluminium casting, almost everyone who does aluminium casting would be our competitor. But if you were to take spools as a product line within aluminium castings, we are the world's leader. So it is very difficult to answer your question in terms of peers or competitors directly as a company. Yes, you can pick out individual things and I'd be able to give you one or two names for who the others are.
So in the locks business, who would we consider as a peer?
In locks business, we will have a company called Minda Corp as our competitor. We would have somebody like Jayushin would be our customer. But again, even within locks, the product lines are a little blurred. In some cases, we fight directly because locks have a very, very strong entry barrier. So if you see in history, there were 5 players. Out of those 5 players, we as a company acquired one, which was a deep lock. And now there is us, there is Minda Corp, and there is Jayushin, who are the ones. And of course, there are one or two small ones, one out of Aligarh and one out of somewhere else. But in the last 50 years, we haven't seen any new player come into this market.
Okay, sir. And so, other than Hero and TVS, given that we are present in CV and as well as off-highway segments, who would be the top 2 players that we are supplying in CV and off-highway?
In off-highway, we supply to everyone. We supply, if you look at off-highway, we supply to Caterpillar, we supply to Tata Hitachi, we supply to SANY, we supply to Volvo, we supply to Kubota. We, of course, supply, our largest customer is JCB. If you were to look at the entire lineup, we supply to almost everyone there is in this industry. Everyone.
Okay, so that's it from my side. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Okay. Thank you once again, Dolat Capital, and thank you to all the investors for your time this morning. I hope we've been able to do some justice to your questions. We'd be very happy to have you visit some of our plants or to sit with us face to face to be able to maybe understand things a little more. What I can tell you is, as I sign off today, that your company is in very comfortable position in the industry today. We have a lot to look forward to. The investments that have been made in the past couple of years are now showing fruit, and this will only grow into the next financial year. I think Yashpalji has already said that we are probably looking at almost a 30% growth in the next year as well. So it should be good times, good margins, good product lines, and the way things seem today, the market goes unabated. Of course, there are some cons of higher interest rates that are dropping in. Somebody mentioned about the volatility in commodity prices. Notwithstanding, I do feel that there are happy days ahead. With that, thank you all very much. And once again, I wish you and your families a very, very happy New Year. God bless.
Thank you very much.
Thank you.
On behalf of Dolat Capital Market Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.
Thank you.